Hello and welcome to the trade setup. In this video we are looking at Iren. It is time for another update, and on this chart we have been trying to track this idea of a potential impulse to form in the larger structure in a 1, 2, 3rd, 4th and a 5th. This was always going to be a fragile interpretation because even if we managed to build an impulse internally within this wave to the upside, we would have not been able to discard the possibility of a simpler to find the count for, to find the waves for A, B, C structure instead. Because, to be honest, there is no denying that this initial wave to the upside is very difficult to be tracked as a wave 1. We would need to consider this a truncation, we would need to consider a leading diagonal to have formed, and even then might still work out better as an ABC structure. Now, nonetheless, we have been focusing on a potential impulse to form within this area in both cases, and this was going to be available to us as long as we held the 50% retracement at the $33.5 level in a correction in a wave 4. Currently, this is still the case. Currently, we can still track a potential 5th wave to build in this area, and this has been a highly relevant area of support. We have reacted multiple times to 38.2% retracement, here, and even here briefly, and then we have bottomed in the 50% retracement before creating a substantial push to the upside in a 2x. Now, this, once again, is what we are focusing on, but if we fail to hold the levels of support, meaning we fail to hold the 50% retracement, we need to be highly prepared for this structure to shift into a different pattern. We do have a backup scenario, we have already even discussed about this, and it would really imply the idea of creating instead a larger leading diagonal to the upside where this could form an A, B, C structure instead. I do not really have a middle ground, I believe, at this point, and yeah, sure, technically we might be able to look for a potential 1, 2, 3, 4th and 5th in an ending diagonal, but honestly, based on the proportions we would track for a wave 2 and a wave 4, I would strongly believe the only pattern that would allow us to reliably track still this wave to extend to the upside would be within an A, B, C structure. In that case, the area of support to watch out for, in the eventuality that we break the white scenario, meaning we break below the $33.5 level, would be here at the levels between the $27 and it extends all the way down to the $9.2 level. So we will still be able to look for a potential reversal area in a count to the upside, but this will not be a reliable area of support to look for a trade setup. We will track this area, but once again, do not consider this to be a reliable trade setup, as it will have a very weak structure that does not strongly suggest this pattern will extend to higher prices. You don't need to trade every single chart or even fall in love with the stock. There are so many other options that have better opportunities, that have better structures, that would allow extensions to higher prices, yeah? Just a few examples, we could be talking about ARM, Intel, Palantir. Very soon it's heading into the area of support, it seems. Perhaps even Nvidia could be seeing more upside sooner rather than later. So I really don't see a reason to look for a position in a chart where you have such a weak structure. Now, keep in mind, this applies if we fail to hold the current levels of support for continuation to higher prices. I will even provide you an internal area of support to track for continuation to higher prices that will tell you even earlier than falling below the 50% retracement that this structure is likely not going to hold to extend to higher levels. So let's actually move on to that. And internally, in this pattern, we have been tracking a potential leading diagonal. Actually, this is not what we need. This is the correction we have been tracking. And in this leading diagonal, we have been looking for an initial 5-wave move to the upside, where each of the subwaves of this pattern have been tracked as an ABC structure. So far, it might seem like this would be a reliable 5-wave pattern. We did head into the area of support for a wave 4. We have even reacted to the 38.2% retracement, and we have extended in the next wave to the upside. Now, technically, that's true. We did build a 5-week pattern from this perspective. It's just that I don't really trust this structure. I have to say, I probably prefer the idea of an extension that followed through in the orange interpretation instead, where this was all still part of the wave 3 in white. So really here, I might prefer that this actually topped within a 3-wave pattern to the upside, very much into the 78.6% retracement, our last level of resistance. Don't get me wrong, we only have a 3-wave pattern to the downside. I don't consider this to strongly suggest that we need to extend to lower prices. However, we didn't break the area of resistance, and I don't believe we have created a reliable 5-wave pattern to the upside. Now, regardless of that, we can still track an area of support for continuation to even higher prices. We can still track even a potential 1-2 setup because it is a 5th wave that we are tracking in the white scenario. Whether that is formed in an ending diagonal or not, doesn't really matter. I am able to track a larger 1-2 in this area, look for a 3rd, 4th, and a 5th to complete a larger structure, a larger pattern. And for this, we will have the area of support available to us at the levels between the $49.8 all the way down to the $38.3 level. Now, if we get a week below this last level of support, it's not really a problem. As long as we don't form a sustained break, we can still look for continuation to higher prices. But already, if we get a sustained break below the 78.6% retracement at the $38.3 level, it would be a strong signal that this structure would be expected to not head in the next wave 3 to the upside. It would be a signal that we should consider with higher likelihood that we would be heading in our larger correction into potentially the area of support in orange. Now, I could even provide you an ideal target for such an idea, for such an extension, and that would be the 100% extension of the wave A. And let's actually track this orange interpretation in yellow, since we already used the resistances that we are tracking in a yellow structure. And that is actually very much in line with the first level of support for the idea of a larger A, B, C pattern unfolding. Now, don't take this as a sign that it will certainly go into the 100% extension and even get there or stop there. It's just an ideal target that the wave C is generally drawn towards, but it's not a hard rule that it must land there, this wave C to the downside, this supposed wave C. Now, internally, within this structure, what I'm tracking in this potential movement to the downside, if it is especially a wave 2 in white, I would be considering an A, B, C pattern to unfold in this area. Now, in such a case, I would see this count as quite full. I wouldn't require any additional extensions lower to look for the next wave to the upside, to look for the actual wave 3. But once again, I don't necessarily have strong expectations for this to actually work out as an impulse. I don't find this initial wave 1 to the upside we have in white as a reliable 5-wave pattern, and I would be focusing more on the areas of support and resistance than the actual exact counts. Now, in terms of an extension lower, I will be tracking a potential impulse to form in this area in a 1, 2, 3rd, 4th, and the 5th. I will be tracking this in yellow because if we actually build here the 3rd, 4th, and the 5th, we would break the area of support. It would become very likely that this structure in white is going to fail, and that we will be heading into our large area of support in yellow. Now, in such a case, based on the current bottom we have formed before the market close, we are watching the levels of resistance between the $42.4 all the way up to the $46.6. If we extend lower in a more direct fashion in this wave 3, now we would need to adjust this area of resistance, but we would need to be patient. At the moment, there is no clear signal how this will unfold once the market actually opens. For all we know, we might be getting a severe extension in a 5th wave in its area in something like a 1, 2, 3rd, 4th, and 5th. I'm not ruling that out. I'm just focusing on the levels of support once again. Below the $38.3 level, the 78.6% retracement, we get the first hint, the first suggestion that we are going to fail holding the area of support in white. Below the 50% retracement at the $33.5 level, would be our signal that this structure would have failed to create the next wave to the upside in a fifth wave, and that we are looking for a much more substantial correction. Could be this idea we are tracking for the larger support zone in yellow, could be something even potentially more bearish. It's not necessarily the time to look for the exact count. We will need to wait for a signal that we have bottomed if we fail to extend directly higher, and that would look probably like having a full count potentially and an initial 5-way move to the upside. Before we actually get that, the reliability of this chart will be extremely questionable, and I believe waiting on the sidelines would be much more productive than actually jumping into a trade. Now on the flip side, if we break the 50% retracement here in yellow, which would be a good first signal here, the $46 level, that this pattern is not going to extend to lower prices. And for now, I really don't have much else to add, so these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.